Imagine this. You walk into a dealership, find your dream car, and the dealer asks, "Want to finance it here or online?" Most people just nod and sign without thinking. But here's the twist. The choice you make at that moment could save you thousands of dollars or trap you in debt for years. And in this video, I am going to break down how online car financing really works, step by step, in a way that even a complete beginner can understand. By the end, you'll know the secrets dealers don't tell you, and you'll finally feel confident about financing your next car. So, let's dive in. Number 1. What is online car financing really? Online car financing means you borrow money for a car through an online lender, bank, or financing platform instead of going through the dealership. The lender pays for the car up front, and you repay them in monthly installments with interest. Think of it like buying a house with a mortgage, but much smaller. For example, let's say you want a car that costs $20,000. If you finance online, a lender might approve you for that amount with a 5% interest rate for 60 months. You'll know your payment before you even step foot into the dealership. That's the power of online financing. Number 2. Why people are switching to online financing. Traditional dealership financing often benefits the dealer, not you. Dealers sometimes increase interest rates behind the scenes to make extra profit. Online financing, on the other hand, puts the power back in your hands. You can shop around, compare multiple offers, and pick the lowest rate. Imagine booking a hotel. You wouldn't just take the first room they offer without checking Expedia or Booking.com. It's the same with car loans. Shopping online means you're comparing offers, and that competition drives down costs. Number 3. How does the online financing process work? It's actually simple. Step 1. You go to an online lender's website or a platform that compares multiple lenders. Step 2. You fill out an application with your income, credit score, and the type of car you're interested in. Step 3. You get pre-approved offers within minutes or hours. Step 4. You choose the best offer, and the lender gives you a pre-approval letter or digital certificate. You bring that to the dealership, just like cash. For example, platforms like Capital One Auto Navigator or Lightstream allow you to shop online and even see your estimated payment before you buy. Number 4. What you need before applying online. Lenders want to know you're trustworthy. So they'll look at 3 big things: your credit score, your income, and your debt-to-income ratio. If your credit score is 700 or higher, you'll likely qualify for the best rates. If it's lower, you can still get approved, but the rate will be higher. For instance, someone with a 750 score might get a 5% rate, while someone with a 600 score could get 12% or more. That difference could add up to thousands of dollars over the life of the loan. That's why it pays to check your credit report before applying. Number 5. Pre-approval versus prequalification. What's the difference? This trips up a lot of beginners. Prequalification is like a soft check. The lender gives you an estimate of what you might qualify for, but it's not guaranteed. Pre-approval is stronger. It involves a hard credit check and a more detailed look at your finances. Once pre-approved, you can walk into a dealership with real bargaining power. Think of it as shopping with a gift card that already has money loaded on it. Dealers know you're serious because the money is basically waiting for you. Number 6. Why interest rates matter so much. Even a small difference in rates can cost or save you thousands. Let's take that same $20,000 car. With a 5% interest rate over 60 months, you'll pay around $377 a month. But with a 10% rate, your payment jumps to about $425 a month. Over 5 years, that's nearly $3,000 more. So, when people say, it's only a couple percent difference, they're ignoring how big that number becomes over time. Number 7. Should you go with a bank, credit union, or online lender? Each option has pros and cons. Banks are traditional and stable, but they might not always give the lowest rates. Credit unions often offer better rates, especially if you have good standing as a member. Online lenders can be fast and convenient, with instant approvals. For example, if you're in a rush, an online lender like Carvana's Financing Arm might approve you the same day. But if you want rock-bottom rates, a local credit union may beat them. The trick is to apply to several and compare. Number 8. The hidden fees you need to watch out for? Here's where many beginners get caught. Online loans may come with origination fees, late payment fees, or prepayment penalties. Always read the fine print. For example, if you decide to pay off your loan early to save on interest, some lenders might charge a prepayment fee. That could eat away the savings you hoped for. A smart move is to look for no prepayment penalty in the loan terms. That way, you're free to pay off the loan whenever you want without being punished. Number 9. How online financing can help you negotiate at the dealership. Dealers make money when you finance through them. If you walk in with pre-approved financing from an online lender, you hold the cards. You can say, "I already have a loan with 5% interest. Can you beat it?" Sometimes, the dealer will actually offer you a better deal just to keep your financing in-house. That's the beauty of online pre-approval. It forces the dealer to compete. Number 10. Watch out for add-ons and upsells. Even with financing in place, dealerships love to sell extras like extended warranties, paint protection, or gap insurance. These aren't always bad, but they can inflate your monthly payment. For example, a $2,000 warranty rolled into your loan can turn a manageable payment into a burden. If you want these extras, ask how much they cost in cash, not added into your loan. That way, you know the true cost without sneaky interest charges. Number 11. Should you refinance your car loan later? Yes, refinancing is an option. Let's say you got stuck with a 12% rate because your credit score was low at the time. After a year of on-time payments, your score improves. You could refinance with a new online lender at, say, 6%. That would drop your monthly payment and save you money in the long run. It's like refinancing a mortgage, but on a smaller scale. Many people don't know this, but it can save you thousands. Number 12. The myth about needing a huge down payment. Some people think they need $5,000 or $10,000 up front to finance online. That's not true. While a bigger down payment lowers your loan balance and monthly payments, some lenders allow as little as zero down. Of course, the less you put down, the more you'll pay in interest over time. For example, if you buy a $20,000 car with zero down, your monthly payment might be $377. But if you put $5,000 down, your payment could drop closer to $283. Both are possible, but the down payment gives you breathing room. Number 13. How fast can you actually get approved online? Here's the surprising part. Many online lenders can give you results the same day, some even within minutes. For example, platforms like Capital One or Carvana let you shop cars online and instantly see which ones you're pre-approved for. Compare that to walking into a dealership blind, filling out endless forms, and waiting hours. Online approvals save time and stress. Number 14. The future of car buying is online financing. The trend is clear. More Americans are financing cars online every year. According to Experian, online lenders are grabbing a growing share of the auto loan market, especially among younger buyers. People like the control, transparency, and speed. Imagine shopping for your next car on your phone, securing financing in minutes, and walking into the dealership just to pick up the keys. That's where the industry is heading, and online financing is leading the way. Number 15. Online financing helps build your credit history. When you take out an auto loan online and make consistent, on-time payments, it shows up on your credit report. This builds your credit score over time. For beginners with little credit history, this is huge. For example, someone with no prior credit cards who pays their online car loan faithfully for 2 years could jump from a thin credit file to a solid score above 700. That makes future loans, like mortgages, much cheaper. Number 16. You can sometimes get better car choices online. Some online financing platforms are tied to car marketplaces. This means when you get pre-approved, you also see which cars fit your budget. For example, Carvana and Vroom will show you vehicles that match your financing terms. This can prevent you from falling in love with a car you simply cannot afford. Instead, you shop within your limits from the start, avoiding financial stress. Number 17. Online lenders may offer flexible loan terms. Dealerships usually push standard terms like 60 or 72 months. Online lenders often let you choose from a wider range, like 24 to 84 months. This means you can tailor your payment plan. For instance, a 24-month loan might mean higher payments but thousands less in interest. An 84-month loan means smaller monthly payments but more total interest. Having that choice puts you in control. Number 18. Online financing makes comparing APRs easier. APR, or annual percentage rate, includes both your interest rate and fees. Dealers sometimes hide this by only showing the monthly payment. Online lenders, however, usually display the APR clearly, which makes it easier to compare. Apples to apples. For example, if lender A offers 6% APR and lender B offers 7% APR, you instantly know which costs less overall, even if the monthly payments look similar. Number 19. You can lock in your rate before car prices change. Car prices and interest rates fluctuate. Some online lenders let you lock your financing rate for 30 to 60 days. That means you can shop for your car without worrying about your interest rate suddenly spiking. For instance, if rates rise from 6% to 7% while you're shopping, your locked 6% rate still applies. That's peace of mind many buyers don't realize is available. Number 20. Online lenders may have special deals for green cars. Some lenders promote eco-friendly purchases by giving discounts or lower rates if you finance a hybrid or electric car. For example, certain credit unions knock 0.5% off your rate if you buy a fully electric vehicle. If you were already thinking about going green, this perk makes online financing even more attractive. Number 21. Easier access to customer reviews. When you finance online, you can research the lender just like you would a product on Amazon. You can read reviews from other borrowers, check ratings on Better Business Bureau, and even watch video testimonials. That's much harder to do with a dealer's in-house financing because you only hear their pitch. Reviews help beginners avoid shady lenders and pick trusted ones. Number 22. Online tools help you budget better. Most online financing sites have calculators where you can plug in car prices, down payments, and loan terms to see your monthly payment instantly. For example, you can enter a $25,000 car with a $3,000 down payment and a 5% rate over 60 months. The calculator will show you the exact monthly cost. These tools make budgeting crystal clear before you commit. So, now you know how online car financing works, the steps to take, and the pitfalls to avoid. You've seen how it can save you thousands, give you bargaining power, and make buying a car far less stressful. But here's the big question I want to leave you with. If you were buying your next car tomorrow, would you trust the dealership to handle your financing? Or would you take control and do it online? Drop your answer in the comments.